Would you like to know which cryptocurrencies have the potential to 100 to 1,000 times your money, turning $1,000 into 100,000 if not $1,000,000? Now, I'm going to reveal the top 5 crypto coins to buy right now for December. We'll cover everything from a token backed by Binance founder CZ to a sleeping giant that no one on YouTube has spoken about. The clock is ticking before the market explodes. Let's dive into the coins. Also, just before we go any further, this channel has a daily giveaway of 1 million Shiba tokens. To enter, all you have to do is be subscribed to this channel, like this video, and comment hashtag Shiba Inu. Good luck. Number 1, Tau. Currently priced at $281 with a market cap of $2.7 billion. What is Tau? BITUNIX is an open-source, blockchain-based protocol designed to create a decentralized marketplace for artificial intelligence and machine learning. At its core, it enables a peer-to-peer network where AI models collaboratively train, share, and improve, breaking away from centralized control by tech giants like OpenAI or Google. Instead of siloed, proprietary AI development, BITUNIX incentivizes global participants, such as developers, data providers, and compute contributors, to build collective intelligence through economic rewards. The native cryptocurrency, TAO, powers this ecosystem, mirroring Bitcoin's model with a fixed supply of 21 million tokens and periodic halvings to ensure scarcity. The protocol uses a unique consensus mechanism called Proof of Intelligence, POI, which replaces traditional proof of work, or stake. POI evaluates contributions based on their informational value, e.g., how novel or useful a model's output is, using algorithms like UMA consensus for fair scoring. This creates a self-improving loop. Better models earn more TAO, attracting more contributors and refining the network. TAO's tokenomics are Bitcoin-inspired, 1 TAO per block, with halvings every approximately 4 years. Next in mid-December 2025, reducing daily emissions from 7,200 to 3,600 TAO. Utility. TAO is used for staking, governance, accessing services, and trading subnet-specific alpha tokens in liquidity pools paired with TAO. Unlike centralized AI like ChatGPT, BITUNIX democratizes access. No gatekeepers, no data monopolies. It's permissionless. Anyone can register a hotkey via proof of work or FE to mine or validate. The vision is a pure market for AI, where producers and consumers interact trustlessly, fostering ethical, open-source intelligence. Backed by firms like Polychain, Digital Currency Group, and Grayscale, it has raised significant funding and spun off accelerators like UMA Consensus. Why invest in TAO? Investing in BITUNIX positions you at the intersection of 2 explosive megatrends: AI's trillion-dollar growth and blockchain's push for decentralization. With AI projected to add $15.7 trillion to global GDP by 2030 and crypto's market cap hitting new highs, TAO offers asymmetric upside as the leading DEAI play. The halving in December 2025 plus AI adoption could drive 2 to 5 times gains. Community sentiment is electric. X posts highlight unstoppable beast status, with subnets like Apex or Data Universe seeing consistent buys. Long-term, as AI infrastructure rivals cloud computing, TAO could hit top 10 status. TAO is currently the #1 AI token in the crypto market, and it is undeniable that the crypto AI total market cap will push higher over the coming months and years, with TAO placed perfectly to benefit the most from this and position itself as the #1 AI crypto project for years to come. What are the potential profits? For TAO, my first and lowest target is $400, and this is the target I would aim for if I was just taking a leverage trade. But I think it's very possible for TAO to reach its previous all-time high of $750. Using the crypto profit calculator, this means you could make around $750 in profit from just a $500 investment if the project were to hit this price target. Importantly, you can trade TAO on leverage by using BITUNIX. There is currently a sign-up offer where you get a free $10 just for signing up and taking your first trade. In my free Telegram group a few days ago, we took a leverage long on TAO, and it is already up over 100% from the entry point in just a few short days. You can join the free Telegram group through the link in the description. Number 2, Aster. currently priced at $1.05, with a market cap of $2.1 billion. What is Aster? Aster is a next-generation decentralized exchange that lets you trade cryptocurrency derivatives while keeping full control of your funds. Unlike traditional exchanges that hold your money, Aster runs on blockchain technology, so you trade directly from your own wallet. The platform specializes in perpetual contracts, essentially betting on price movements without owning the actual asset. If you think Bitcoin will go up, you open a long position. If you think it'll drop, you short it. The key advantage is leverage. You can control much larger positions than your actual investment. What makes Aster unique are several groundbreaking features. First, hidden orders that stay completely invisible to other traders until they execute, solving the problem where big orders move prices against you. Second, you can trade US stocks like Apple and Tesla with up to 100 times leverage, with everything settling in crypto. No traditional brokers or KYC required. The platform works across multiple blockchains simultaneously and currently processes around $9 to $10 billion in daily trading volume across 25 markets, consistently beating competitors like Hyperliquid, despite being significantly newer. Why invest in Aster? The decentralized perpetual DEX sector is less than a year old, but already showing explosive growth. Experts believe this sector could be among the top 3 narratives in the next bull cycle, especially as the market shifts focus toward revenue-generating businesses with real utility. Aster has several massive advantages working in its favor. First, unprecedented exchange listings for such a new project. It's already on Binance, Coinbase, and Robinhood, something that took competitors years to achieve. Getting listed on Robinhood is notoriously difficult, and it provides a direct gateway to the multi-trillion-dollar traditional trading market. Second, powerful connections. The team is backed by YZI Labs and has ties to Binance's ecosystem, with CZ himself recently being pardoned and now free to take a more active role. These connections explain the lightning-fast major exchange listings. Third, a revolutionary tokenomics model. Aster has a buyback and burn mechanism where the protocol uses 70 to 90% of trading fee revenue to buy back tokens from the market. They've already bought back over $7.8 million worth, and 50% of all buybacks are permanently burned. This creates constant buy pressure regardless of market conditions. It's essentially a better version of MicroStrategy's Bitcoin strategy, but applied to their own token. Fourth, whale accumulation. On-chain data shows multiple whales loading up massive positions. $8.2 million here, $5 million there, $3 million purchases happening just last week. Smart money is clearly positioning for something big. The global trading market represents trillions of dollars. Crypto is just a tiny fraction. With Aster enabling decentralized trading of stocks, forex, commodities, and crypto without KYC requirements, they are tapping into a market exponentially larger than crypto alone. And they're planning to introduce dark pools, the secretive trading venues used by billionaires and institutions, a feature that likely attracted Robinhood's attention. What are the potential profits? Here's where things get really interesting. Aster currently sits at around a $2.1 billion market cap, at $1.05 per token. Let me show you 3 scenarios based on historical precedent. Conservative BNB comparison. Last cycle, BNB was at a similar $3 to $4 billion market cap at this stage. Even during the bear market, BNB reached a $33 billion market cap. That's over 15 times from where Aster is today. If Aster follows just this conservative path, we're looking at 15 times returns minimum, which would put the price around $15.75 per token. Moderate Hyperliquid comparison. Hyperliquid currently has an $11.7 billion market cap and peaked around $20 billion. If Aster captures even half of Hyperliquid's success while Hyperliquid continues growing, we're looking at 20 to 25 times potential from current levels, putting Aster at $21 to $26.25 per token. Bull case, industry analyst. Target. Some analysts believe Aster could reach a $100 billion market cap within 4 to 6 years, as the decentralized trading sector matures and captures market share from centralized platforms. From the current $2.1 billion base, that's nearly a 50 times return, which would bring Aster to around $52.50 per token. Let's break down what these numbers mean for your investment. Using the conservative 15 times scenario. Using the crypto profit calculator, This means you could make around $7,000 in profit from just a $500 investment if the project were to hit this conservative 15 times price target. Using the moderate 25 times scenario. Using the crypto profit calculator, this means you could make around $12,000 in profit from just a $500 investment if the project were to hit this moderate 25 times price target. Using the bull case 50 times scenario. Using the crypto profit calculator, this means you could make around $24,500 in profit from just a $500 investment if the project were to hit this bull case 50 times price target. The beauty of Aster is the risk-reward profile. With the buyback mechanism creating constant demand, strong exchange support providing liquidity, and whale accumulation showing institutional confidence, the downside is cushioned while the upside remains massive. Now, interestingly, on BITUNIX, Aster is available to trade with leverage. If you were to take a $500 long position with 5 times leverage and hit that conservative 15 times target, your profits would jump from $7,000 all the way to $35,000. But remember, leverage amplifies both gains and losses, so only use it if you understand the risks. If you want to trade Aster or any other cryptocurrency on leverage, I recommend signing up to BITUNIX through the link in the description for free bonuses. Also in my Telegram group, 3 days ago, I gave out a leverage long signal on Aster whilst it was at 88 cents. That trade is currently up over 150% at the time of making this video. And the way things are looking, it could go a heck of a lot higher. You can also join my Telegram for completely free by signing up to the link in the description. Number 3, Gala. Currently priced at the number on screen with a market cap of $357 million. What is Gala? Gala is a utility and governance token that powers the Gala ecosystem, a decentralized blockchain-based platform primarily focused on entertainment, with a strong emphasis on gaming, but expanding into music and film. Launched in 2020 by Gala Games, founded by Eric Schiermeier and Wright Thurston, the platform aims to revolutionize player-owned economies by leveraging blockchain technology to enable true ownership of digital assets, play-to-earn mechanics, and community-driven development. Unlike traditional gaming, where assets are controlled by centralized companies, Gala empowers users to own, trade, and monetize in-game items as non-fungible tokens or cryptocurrencies, fostering a player-first model that rewards participation and creativity. At its heart, Gala is built around the Gala Games platform, which hosts a variety of blockchain-integrated games where players can earn Gala tokens or NFTs through gameplay achievements, such as completing quests or competing in events. The ecosystem operates on Gala Chain, a proprietary Layer 1 blockchain using a proof-of-stake consensus mechanism to secure the network. This allows for faster transactions and energy efficiency compared to proof-of-work systems. Why invest in Gala? I have personally taken a long position on Gala based on purely technical analysis. I shared this long at the time in my Telegram group and gave my reasoning for it in there. I got a bottom sniper signal from my custom algorithm, and it was at the bottom of a flattening Bollinger Band. Both strong indicators that the token is at a local bottom level and should see some green days ahead. Other than that, a few other coins in the gaming sector exploded at the start of the week, like Echelon Prime, which is up over 100%. This has brought some eyes back to the gaming sector of the crypto industry, and now we may see a mini gaming narrative happen, especially as it has been so long since we have seen a crypto gaming pump. What are the potential profits? I think in the short term, it's feasible we see Gala get back to October levels of 0.016. And in the longer run, I think we could see it reaching 0.021 or higher. I would mainly recommend taking this trade on leverage, as that is what I have done. Using the crypto profit calculator, this means you could make around $950 in profit from just a $500 investment if the project were to hit this price target. And this is not including with leverage. Number 4, Plasma, currently priced at 19 cents, with a market cap of $391 million. What is Plasma? Plasma is a specialized blockchain built exclusively for one purpose: making stablecoins work like actual money should. While other blockchains like Ethereum try to do everything, Plasma laser focuses on solving the problems that make stablecoins expensive and slow to use. Think of it this way: if you want to send $100 in USDC today on Ethereum, you might pay $20 to $50 in transaction transaction fees and wait several minutes for confirmation. Plasma solves this by creating a blockchain where stablecoin transfers happen in under 1 second and cost almost nothing. The platform uses something called Plasma BFT Consensus, which is specifically designed for stablecoin operations. This allows the network to process over 1,000 transactions per second with institutional-grade security. It's also fully compatible with Ethereum applications, so existing DeFi protocols can easily integrate. What makes Plasma particularly innovative is its native Bitcoin bridge, allowing direct connection between Bitcoin and stablecoins without complex wrapping mechanisms. The platform launched its mainnet beta on September 25th, 2025, immediately capturing $3 billion in total value locked within 24 hours. Plasma has also launched Plasma One, the first neobank built entirely around stablecoins, showing how the technology can power real-world financial applications for saving, spending, and earning in digital dollars. Why invest in Plasma? The investment case for Plasma centers on capturing value from the massive stablecoin market expansion. The stablecoin market has grown to over $170 billion and is projected to reach $1 trillion within the next decade. Plasma is positioned to become the infrastructure layer powering this growth. The backing is exceptional. Major institutional investors include Founders Fund, which is Peter Thiel's firm, Framework, Flow Traders, DRW, BITUNIX, and Tether. This isn't just money, it's strategic partnerships with the biggest players in both traditional finance and crypto. Having Tether as a direct partner is particularly powerful since USDT is the world's largest stablecoin. The market timing is perfect. Current stablecoin infrastructure is broken. High fees, slow speeds, and poor user experience limit adoption. Meanwhile, global demand for digital dollars is exploding, especially in emerging markets where traditional banking fails billions of people. Plasma's early performance validates the opportunity. The token launched at around $1.33 and immediately generated over $5.6 billion in daily trading volume. The most active pair, XPL and Tether on Binance alone, trades over $1.2 billion daily, showing serious institutional interest. The competitive advantage is significant. While other blockchains compete in general smart contracts, Plasma pioneered the dedicated stablecoin infrastructure category. This first-mover advantage is crucial for establishing network effects, and the purpose-built architecture creates a technical moat that general-purpose blockchains can't easily replicate. The XPL token has strong value accrual mechanisms. With a fixed supply of 10 billion tokens and only 1.8 billion currently circulating, supply dynamics favor price appreciation as adoption grows. The token is used for transaction fees, staking rewards, governance, and ecosystem incentives. Another reason is that Plasma hasn't performed well in the past few months, and entries are extremely low. Remember, you want to be buying tokens when things are bearish, not when it is very bullish and everyone is talking about it. This puts you in a strong position because Plasma only has to go up to half of its all-time high, and you will be up over 350% from current levels. What are the potential profits? As I said earlier, if Plasma reaches half of its all-time high, you will be up 350% from current entry levels. This would give Plasma a target of around 86 cents. Using the crypto profit calculator, this means you could make around $1,800 in profit from just a $500 investment if the project were to hit this price target. Number 5, EDL, currently priced at 3 cents. With a market cap of $15 million. What is EDL? EDL is a decentralized lending protocol designed specifically for tokenized stocks. Built on the Aave v3 architecture and deployed on Base, EDL creates a global, automated securities lending marketplace, allowing holders of tokenized equities to earn yield or borrow liquidity without selling their assets. How EDL works. Lenders deposit tokenized stocks from platforms like Ondo Finance and X Stocks and earn interest as others borrow against them. Borrowers use their tokenized stocks as collateral to borrow stablecoins, keeping exposure to price appreciation and dividends. Loans are over-collateralized, have no due date, and are automatically managed through smart contracts. EDL aims to bring the $2.6 trillion securities lending market on-chain and redistribute the billions in annual fees traditionally captured by brokers directly to asset holders. Why invest in EDL? The bullish case. massive market opportunity. Securities lending is a multi-trillion-dollar industry with approximately $10 billion in annual revenue, currently dominated by banks. EDL attempts to bring this to DeFi, potentially democratizing yields normally unavailable to retail investors. Strong RWA narrative. Tokenized assets are one of the fastest growing sectors in crypto. Around $36 billion in RWAs on-chain. Around $660 million in tokenized public equities. Significant monthly transfer volume. EDL sits directly in the middle of this expanding trend. Proven technical foundation. EDL uses Aave v3's audited, battle-tested architecture, reducing development risk and increasing credibility. Team experience. Team members come from State Street, JP Morgan, BlockFi, and Airbnb, bringing both traditional finance and fintech expertise. Growth of tokenized stocks. Platforms like Kraken and Ondo Finance are rapidly expanding global access to tokenized equities. This increases the potential user base for EDL's lending market. Possible regulatory tailwinds. Institutions and regulators are increasingly warming to tokenized securities, which could benefit EDL's long-term adoption. There are some things to consider. Approximately 160 wallets accumulated 30% of the EDEL supply at launch, far more than the team's disclosed allocation, which led to a big crash after the initial pump to a $50 million market cap. But the crash has been and gone, and the token is now at a much better entry level, with many of the big holders selling their bags already, meaning distribution is a lot better at the moment. What are the potential profits? EDL is well placed to take advantage of this new narrative of stocks combining with crypto tokens, and at a $15 million market cap, there is a lot of upside potential. Of course, this project is without a doubt a much higher risk play than the other 4 in the video, due to its recent launch and controversies, so if you have a low risk tolerance and want to reserve cash, I would look elsewhere. But for my fellow Degans, I think that EDL could reach a target price of around $75 million in market cap. Using the crypto profit calculator, this means you could make around $2,000 in profit from just a $500 investment if the project were to hit this price target.